All right, welcome back, everybody. Another USDA report under our belts here, this one for the month of August. We're going to go over the highlights here. Starting with corn, major change, the theme was the drop in yield, 174.6 from 179.5 in July. That was lower than estimates and certainly helped support the price of the corn market. That's what stood out the most today. Along with the drop in world stocks. Brazil was reduced down to 87 million metric ton versus 93 in July. Argentina came in unchanged. And then kind of a surprise would be Ukraine dropping 24 from 30 in July. So we had a pretty good trade on corn today. It ended up closing higher. The thing that was a little bit disappointing, though, in today's trade, as we record this after the market, was that we did close below 580. So a little bit of cautious there because the 580 area has been near-term resistance. So as you can see, we've got that blue line at 580. The black line is 6. If we can get a good close above 580, maybe we have a new trading range between 580 and 6 with the ending stocks numbers down at that 1.2 level. At this time, we're not quite sure that we have the numbers that we need to get above, have a significant move above 6 or really even 650 with these current numbers in here. Okay. Now heading over to the bean side of things, this was kind of interesting. I mean, really what happened, they left the ending stocks unchanged. They basically moved, okay, we had larger beginning stocks. So they raised the ending stocks number from last year. They reduced usage via crushings and exports. And then by shaving off that 0.8 bushels per acre, we're able to keep the ending stocks number the same. Now, that seems a little bit of a specific reduction on the part of the USDA, to get that number to get that number to stay the same. So, the market reacted positive at first, but then now here at the end of the day, closed only a penny higher. I don't think the market was really fooled by this. If you add back that 0.8 bushels per acre, you could be seeing, you could be looking at upwards of 200 million bushels in ending stock. So that's quite a bit of an increase, with the other numbers that they changed. So these are the numbers that we have to work with. But again, it seems like the market didn't really buy into this too much after it had a little bit of time to digest. So as we look at the bean chart here, the November daily bean chart, again, key support remains at $13. 14 is kind of been the resistance point in here. Now, we're starting to wonder with the new numbers and perhaps, maybe a bigger yield does end up showing up. That 1350 is the new high water mark. So ultimately, we continue to like puts here as far as beans go. There is some news out that China might step back on their imports. But again, when it comes to China, we always believe that you should watch what they do and not what they say. So they have come to the table with some flash sales in here lately. So again, kind of watch what they do, not what they say, but not a very good report overall for the bean market. Wheat had the best report here, really out of everything. As far as the reductions on the U.S. side, as far as yield and ending stocks, most of that was already known with the spring wheat problems. What stood out was the major drop in Russian production in here and the world stocks dropping. So we had EU wheat futures and Russian wheat futures both making new contract highs today. And we'll flip over to this KC wheat chart. All of the September wheat contracts, KC Chicago and September, are all within the recent highs in here that were set back in the May timeframe. So, we could definitely be looking at a breakout above those levels, at which point you're probably thinking $7.80 to $8 wheat potential here for KC and Chicago, and you can finally see that $9.80 to $10 range for September wheat. So just some things to think about. The wheat market looks like it could be strong, and producers are going to have to come in and figure out some sales decisions in here. So, quickly wrap up our final thoughts. The report was fairly bullish, corn and wheat. Again, a new trading range from corn would possibly be 580 to 6. A little disappointing today, though, that the trade didn't close above 580 after the report. We still have tomorrow. Obviously, one day doesn't make a market, so we'll kind of keep an eye on that. But again, do we really have the incentive to get above $6 at this point? And we're not quite sure that that's necessary with today's numbers. And then again, as we pointed out on wheat, we're either going to fail here at this price point, which is previous, key resistance, or we're looking at a breakout to some new highs. So kind of exciting time to be watching the wheat market. Again, if you followed our covered call strategy yesterday, this is a good opportunity if you have some near-term needs to consider looking at some of those call opportunities as the volatility is high and prices are climbing. So have your targets in mind. Again, report was neutral at best for beans. We would say it was probably more bearish than anything. We continue to like the $13 puts in here for protection. We're still at a point with the bean market, could certainly swing either direction, but today's report was not very reassuring if you're bullish beans here certainly in the near term. And then finally, we just want to remind everybody we're at that time of year to have a plan in general, but in this case too, if the markets run higher, cash sales have been made. There are fence positions out there. What are you going to do if the market does decide to push higher? Are you going to be able to live with those sales that you made? Are you going to want to cover some of your position with calls or futures contracts? And then what if those don't go your way? Are you willing to take on the risk of a loss on futures or call options as well? So some things to keep in mind. And again, is you can kind of attack these markets two ways. You can either trail the market with stops, at which point, of course, you're probably going to miss the high if you're trailing it with stops, as by nature those are behind price action, or you can sit out there and have price targets. And again, you'll likely miss the top because if you sell at, let's say, a resistance point and the market breaks through, you're going to have a new target to figure out. So that is the beauty and the art behind marketing and making decisions. But the opportunities, are there. And if you have questions, feel free to give us a call or email us, admin@prime-ag.net. We always link that in the description below. If you found this video helpful, please give it a like so other people can find it. And again, if you'd like to be notified when we post new content, make sure to subscribe to our page. Thank you.